Hello everyone, this is Dr.Syamala Devi from the Department of MBA, International Business Studies, Acharya Nagarjuna University. And our today's topic is regarding controlling. Okay, so controlling is one of the functions of management and last function of management. So after planning, organizing, staffing, directing, the last one is controlling function. Okay, so under controlling function we are going to study about what are the techniques that are used for controlling. Okay, so or what are the aids that are used for controlling. So actually, planning and controlling are basic managerial functions. Both are closely interrelated. See, what does planning means? Planning determines how the resources of the concern should be utilized to achieve the organizational objectives. Okay, so planning, what does it determines? Okay, how to use resources. Okay, how to use resources. Then what does controlling means? Control, see, control seeks to, okay, find out whether those resources, okay, whether these resources are utilized in the best way and according to the planned way, whether actual performance conforms to planned performance. So controlling sees that one. That means what we can say controlling means controlling it evaluates the total organizational performance. It evaluates the total organizational performance, okay, in achieving the organizational objectives. Okay, so it measures and evaluates performance and records the deviations. If at all there are any deviations in the standard performance and actual performance. Okay. So what to do? It suggests, controlling part suggests remedial actions to correct those deviations. So the basic task of control is measurement of actual performance and its comparison with predetermined or planned performance. Okay, so there are several techniques. As I said before, we have different techniques or else several aids for this controlling purpose. So this may be classified as traditional techniques, okay, and modern techniques. So, under traditional techniques, we will study about budgeting, costing, break-even analysis, managerial statistics, special reports, internal audit, personal observation, etc. And if you see about modern techniques, so under modern techniques, we are going to study about PERT or CPM. PERT is nothing but Project Evaluation Review Technique, and CPM means it stands for Critical Path Method. So this is one of the modern technique and this is very important. Then return on investment, which is nothing but ROI, MIS, Management Information System, Responsibility Accounting, Management Audit, Human Resource Accounting. All these are considered as modern techniques and these are modern techniques are very important techniques compared to traditional techniques. But we have to study both traditional techniques and modern techniques. So if we see about traditional techniques, first one is budgeting. So what does budgeting means? This is the most widely used technique for managerial control. See, we have both financial control and physical control also. Okay, physical resources control also. If we see under financial resource control, this budgetary control system plays important role. So budgetary control is a system which uses budgets for the purpose of planning and controlling. See, it is used to control all aspects of the organizational activities. All organizational activities. So what are organizational activities? Okay. So organizational activities may be financial activities, okay, operational activities and other activities. So a budget is a quantitative expression of a plan of action. Okay. Again, I am repeating. A budget means it is a quantitative expression. So what does quantitative expression means? Quantitative expression has a perfect data with facts and figures. A numerical value can be attained by quantitative expression. So, a budget is a quantitative expression of a plan of action. It is mostly expressed in financial terms, though it may be expressed in non-financial terms like number of employees, units of time, etc. Okay. And under this technique, budgets are prepared for different functional areas, such as we have different, for an organization, we know we have different functional areas like sales, production, distribution, okay, finance, okay, likewise. So we have different functional areas. So, and these functional budgets are consolidated. So all these functional budgets will be consolidated as master budget, okay, consolidated as a master budget, okay. And who is responsible for this budget? Executives are made responsible for the achievement of budget results. And if at all there are any variations analyzed, then corrective actions should be taken in order to ensure that actual performance conforms to budgeted performance. Okay, we all know under controlling part we have standards and actuals. So those are compared, and if at all there are any deviations or variations, those should be corrected. Okay. And if you see the second one, okay, budgeting, after budgeting, we have to see costing. So under costing, it is nothing but an expense. Costing is, okay. So though costing or cost accounting is part of the overall accounting process and is mainly concerned with cost determination. Okay. There are certain aspects of costing like standard costing, marginal costing, control accounts. Okay. Likewise, we have different costings which help management in the process of controlling. So the technique of standard costing is in fact an extension of the budgetary control. Under this technique, standards are fixed in respect of each product for materials, okay, wages, overhead expenses, etc. in terms of time, quantity, as well as cost also. Okay, all these products or wages, overhead expenses, all these comes under the cost accounting. Okay, so these will be in terms of time, quantity, cost, they will be determined. And differences between actual expenditure and predetermined standards, as we know that variances are thus revealed. Okay, so these variances are analyzed and corrective action is taken to ensure that actual cost conforms to standard cost. Okay, so predetermined cost should be made, determined, and according to that actual cost should be seen. If at all variance is there, we have to take corrective actions. Okay, then coming to break-even analysis. Okay, so we all know that this is also known as break-even analysis, cost, volume, profit analysis. Okay, and under break-even analysis, a chart is prepared which is known as break-even chart. Okay, so it represents, what does this chart means? This chart represents graphically the relationship between, it represents graphically, the chart represents graphically the relationship between the cost, volume and profit. Okay, so break-even chart is a valuable control aid. It helps management in making decisions on various aspects. Okay, so now coming to managerial statistics. What does managerial statistics means? Statistics relating to past and present business operations are helpful to management in planning and decision making. Okay, definitely statistics helps for the management. Okay, in order to get the data from the past and also for the present, statistics data is needed, which is helpful in planning and decision making. So, data relating to production, sales, expenses, etc., over a period of years, okay, help management in making projections for the future, for the planning, forecasting. Okay, so an analysis of the data in terms of uh, averages, percentages, ratios, correlation, coefficient, etc., all these are uh, analyzed. Okay, these are the tools to analyze. So under statistics, which helps management in the process of control. Okay, then next one is special reports. So what does special reports means? See, in the conduct of business, some special problems may arise, or there may develop some problem areas which cannot be tackled through routine accounting and statistical reports. Daily, the routine, the same accounting problems or else statistical reports may arise, but for specific reasons, for special reasons, special problems, okay, for some special problems may arise. So at that time, for this purpose, an expert within the organization or else from outside the organization may be assigned the task of studying the problem and preparing a special report on that particular problem or issue. So that is a special report, means it is given by an external or internal expert of an organization. Okay, he will find out the problem. He is assigned the task of studying the problem and he will solve that problem. And internal audit. What does internal audit means? Internal audit is an audit conducted by special staff appointed for this purpose only, for auditing purpose only. Okay, so it is also called operational audit. Okay, internal audit is known as operational audit. And in addition to verifying the accuracy and reliability of books of accounts and financial statements, it also makes a critical appraisal of the policies, if at all necessary, by scrutinizing the accuracy, reliability of books of accounts and financial statements of the organization. Okay, they may give a critical appraisal of the policies or else procedures or the internal control system, and they may point out defects and weaknesses that need to be corrected. Okay, so it turns up the morale of employees and helps the management in ensuring that events conform to plans. So this is about the internal audit. Now, personal observation. So ultimately, business activities can be controlled only through measurement and control of human performance. Okay, definitely there should be a measurement, evaluation. So managers should control the activities of their subordinates through periodical observation. Okay, personal observation should be made by the superiors on subordinates by periodical observations. Okay, of their work methods, attitudes to work, and final performance. Okay, then now coming to PERT or CPM under modern techniques. Okay, so what does PERT means or CPM means PERT means Program Evaluation and Review Technique. Now coming to CPM, it stands for Critical Path Method. So both these are very useful techniques for planning large one-time projects, means heavy projects, long-time projects. Okay, one-time projects, for those type of projects. Okay, this project evaluation technique and critical path methods are used. Okay, a project consists of several activities and sub activities. We all know what is the project. Project means it consists of activities. So also sub activities, several activities and sub activities. So to complete the project, these activities should be taken up in a proper sequence and completed in the allotted time. There will be a sequence. Okay, after completing the first work, then we have to go for second activity. So after completing second activity only, we have to go for third activity. Likewise, we have to finish. There will be a starting point and ending point. So till ending point, we have to complete the activities of that particular project. So to complete the project, these activities should be taken up in a proper sequence and completed in the allotted time, within the prescribed time. Okay, so some of the activities can be taken up simultaneously at a time. For example, first, this is the first activity of a project. Okay, then I have to do second project, then I have to do third project. So 2 and 3 projects should be done simultaneously. So here there will be a merge activity. Okay, from one is a activity. After completing, immediately completing after the first activity, 2-3 activities done similarly, parallelly. So we have to draw the diagram like this. Then afterwards, while a project is completed only when all activities are completed. So activities have precedence and dependence relationships. Okay, precedence is the first one, is this one first activity is known as precedent activity. Second activity is the dependence. Okay, precedent and dependence relationships. Okay, so based on this, a network is developed showing the sequence, time taken, and the time of start of activities. Okay, so the event with which the project begins is known as the start event. As I said here, first event is the first activity is the start event. For example, after 2-3 there is also fourth activity. Okay, and fifth activity. Okay, so that this fifth activity will be the last activity. Okay, so there will be a starting point and end event also. So in between these two, there may be several different sequences from 1 to 5. In between there are many activities. So each of these the sequences are known as the path. Okay, so a critical path is one which is the longest in terms of time. So there will be a critical path, means there will be a longest time for a project. Okay, so that longest time taken for a project is known as the critical path. Okay, so this means that the project cannot be completed in less than the time of critical path. So PERT and CPM are based on the same principles. The difference between the two is that while CPM assumes duration of every activity, okay, CPM assumes duration. Okay, CPM assumes duration of every activity to be constant. Every activity to be constant. But PERT allows for uncertainty of duration of activities. There will be uncertainty. Okay, under PERT. Okay, so it is used when the emphasis is on shortening the execution time of the project without giving much importance to cost considerations. CPM is preferred when it is desired to minimize overall cost for a given execution time through optimum allocation of resources. When is CPM is used means, okay, it is preferred only when it is desired to minimize overall cost. Okay, minimizing of cost. Okay, reducing of the cost. At that time, this is used for a given execution of time through optimum allocation of resources, optimally maximum utilization of resources. At that time, CPM method is used. So though these two techniques are developed basically for larger projects, they can be used with advantage for the execution of small projects also, depending upon the requirement. Either PERT or CPM, anyone can be used. Okay. Then another one is return on investment, which is nothing but ROI. This technique seeks to evaluate the performance of an organization on the basis of the amount of profit. Okay. Return on investment is, it is performance is analyzed, evaluated on the basis of profit. Okay. And it ignores absolute profit for judging the efficiency of an organization. What does this mean? Means the rate of return is calculated by dividing the profit by total investment. Okay. So there is a controversy regarding the investment. Why? Because by total investment only we are trying to find out the profit. Okay. So uh, there is a conversation, there is a controversy, means regarding this investment, means according to some, investment should include total fixed and current assets without reducing the liabilities and reserves. We all know we have assets, liabilities. Okay. Total fixed assets, current assets, likewise. But some of the people says that investment should include total fixed assets also, current assets also, but without reducing the liabilities and reserve fund. Okay. On the other hand, many other organizations, they say that depreciation and current liabilities should be deducted from the total value of assets to determine the net value of investment in order to find out the total investment. Why? Because first of all we have to get the total investment. Okay. Then only we can find out the profit. So in that total investment, okay, some are saying that to include these fixed current assets but not to include liabilities and reserves. But some are calculating along with the depreciation and current liabilities also should be deducted from the total value of assets. Okay. So depending upon that, return on investment will be determined. Then coming to, so that is return on investment is another modern technique that is followed for controlling purpose. Then MIS, management information system. So what does this means? Information is needed by management for the purpose of control and decision making. So in order to have a control and in order to take decisions, definitely information is, data is needed. So under this technique, a separate wing is created within the organization. Okay. Why? Because in order to provide past, present and projected information relating to internal operations and external intelligence, regarding that information is collected. So such a wing specially created to supply only information to management. Okay, that is why it is called as management information system. They particularly give specifically information to only the management. So many big organizations are having computer based information systems. Okay. So in designing MIS, attention should be paid to the relevance of the data to decision making. Now coming to responsibility accounting. So this is a part of the management accounting system. Under this system, organization is divided into responsibility centers. Okay, under responsibility accounting, organization is divided into responsibility centers, RC. Okay, responsibility centers or else divisions, and each center is headed by a responsible person for achievement of the target set for his center. So costs are assigned to responsibility centers instead of products. So a distinction is made between costs which are controllable by the head of the responsibility center. Why? Because he is responsible. Responsibility center under he is headed by a person. So that person will be responsible. Okay. In order to control. And under this technique, control over operations and cost is exercised through the head of responsibility centers. That is about responsibility accounting. Under this accounting only, we will study about responsible accounting. Now, management audit means the performance of an organization depends to large extent upon the quality of management. Okay. So, the techniques discussed above focus attention on the end results of activities, but they will ignore the quality of the managing system. Okay, they have only their main focus will be on the end results, what is happening at the end, but they will not consider, or else they will ignore the quality of the managing system. So under this technique, a critical and independent evaluation is made of the total managerial process. Independent evaluation means for each and every function like planning, organizing, staffing, directing, controlling, each managerial persons will be analyzed, evaluated. Okay, such a critical evaluation of the management process is called management audit. Now, human resource accounting. So, human resource accounting means the employee of an organization who constitute the human resource are more important than the physical resources. What are physical resources? Physical resources are nothing but the machines, tools, techniques, equipments, etc. But more than physical resources, human resources are more important. So, traditional methods of accounting do not make any attempt at measuring the value of human resources. Okay, so traditional means like this: budgeting, costing for human resource, evaluating the human resource. Okay, as the case will be done in assets. For assets we will do like that only: costing, break even analysis, budgeting, all these things. But instead the expenditure incurred, how we will evaluate human resource means we will see the expenditure incurred in recruiting, selection. Okay, recruiting, selection, hiring, training. Okay, training likewise. So we will see developing human assets, all these will be written off as revenue expenditure. Okay, with the result that profits are understated, profits will be understated. Why? Because we are incurring some expenditure on recruiting, selecting, hiring, training and developing the human assets. So under this technique, an attempt is made to measure the value of human resources. Okay. So this is about the control aids or techniques of controlling. Okay. In the next class, we will learn about only project evaluation review technique and critical path method. Okay.